The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, Eastern Time. Why is it not going in? There it is. Z17. I can give you all the updates. Remarkable market, and that every single buying opportunity. This is the first time I can recall in years. I'm saying in years. I actually don't recall. So I have to say in years where for so many consecutive days, the E-minis have not been down in the overnight, coming into the early morning, more than just 3-4 points, maybe 6 at the most. No double. There was one double-digit move down, and that was very brief. What was that? That was the day where market opened sharply lower and then regained most of it by the end of the day. I'm just trying to think. It was a few Thursdays ago, I think. Anyway, so this is quite remarkable in the general. I can't call it bullish because I really don't. I don't read any bullish news. In other words, I don't read. There aren't all these ads like flipping houses. You're not getting all these courses. There are some that I'm starting to hear about on the radio and on TV, but I'm not getting that kind of plethora of how to make 2,000 a day or whatever it is that you'll hear in real bull markets. So that to me says that I've got to consider that this is part of a buying phase, and I spoke about this yesterday, where internationally almost all the markets are doing very well, and then we are getting to a technical overbought situation. I don't think it's more an emotional. I think it's just purely technical at this particular point. And what's really important about it is that we keep having high-level consolidations. Look, you're looking at the E-mini right now. It happens to be unchanged at 25.53. Made a new high, 25.53.50. It's been testing that whole area. So that goes from the 10th, 25.53.25, the 11th, 25.53.50, and today so far, 25.53.25. We should make that extra 25 cents at least. But what's really fascinating about this is if you're looking at this chart, look at that high-level consolidation back in September 26th, was it September 20th? Makes a peak C at 24.94. This is December E-mini contract. And then it just basically goes sideways, making a chap wave falling axe formation, slightly lower lows, slightly lower highs, and a little bit deeper lows. And then boom, it makes that leg D, has 1 day of consolidation inside bar, and then breaks out. And we keep seeing that. But technically, what's really important now is that the on-balance volume is becoming extremely overbought. I have to admit, at 94% and flat, that stochastic is not yet giving me a sell signal. I thought it would give us some kind of a sell signal today. We went to the small short Dow position via one of the inverse instruments, and as far as I can see, there is. Let me do this. Actually, let me just run the numbers, then we'll go to the technical aspect. It's just really important. A lot of people like to hear, what are the numbers? The E-mini is down 0.75. The Dow is, the Dow right now is up 3.73 at 22,876, all-time high. Leg E in the daily going right into the Chapman wave inside track repellent zone. The MACD is you can see the histogram starting to pull back, but it's still looking very good. To get from here in the 9 differential, the green line, moving average, to the red line at 189, that would take a bull of about 230 points at least, probably about 275, to come down and actually touch it. So so far this is bullish action. I'm just going on the lettering, on the configuration, on other factors to say, I said to subscribers, let me just drink a water here. To my opening call, since some subscribers are long from the diamonds from 222.90, and the diamonds are trading right now at 228.60s. This essentially is a position that would negate any gain over there. But I'm really saying, and I say to my subscribers, if you look at this particular chart right here with the Dow daily on the left, you see this green line. This is what I call a propeller shaft expansion, and that takes you to, did I type in the number? No, I didn't. It takes you about to 22,924. Everything about this move says that the 22,900s should be extremely strong resistance, and that even if there is a touch of 23, it should just be momentary and we should be pulling back. So a high-level consolidation at best, but at worst, there is a time, maybe not all that much in price yet, although I can tell you, I could give you a case that says if the Dow breaks 22,540, the 20-period exponential moving average, this is going to turn into a deeper correction than one would normally think of, even if it's time and some price. So that's what I'm looking at. Strong resistance now, I think the upside is far more limited than the downside. That's really what I'm looking at right now. So let's get back to our nitty-gritties here. You got so upside, yep, 22,900, or right in the 900s, 920s actually is where there's going to be very strong resistance. So far, good support in the 9-period moving average of 22,737. Haven't even touched that level in a long time. Here we go. S&P, SPX.X. The S&P right now hasn't made a new high. It's just under the previous high of G/C. I'd said to subscribers in my opening call this morning in the Traders Corner, where we have all our positions and all the different instruments we look at and get prices for every day. I'm looking at this and I'm saying there could really well be a leg D, a nominal new high above the 25. What was the high? 25.50. Isn't this interesting? Look, on the 10th of October, 2555.23. Remember that, 23. The next day, the high is 2555.24, 1 penny higher. And so far today, we've got 2555.26. So we've made another new recovery high. I mean, to take at all-time highs, to take 1, 2, 3, 4, 5, 6 days to go maybe 4 points, 5 points higher. At all-time highs, you'd expect at all-time highs, you're going to spike even much higher, or you're going to start your pullback. So this is a high-level consolidation as it stands right now. A close on the S&P below 25.41. So 13 points, about 150 points on the Dow lower, and 13 points on the S&P lower. Starts the consolidation process. Hasn't done that yet. All right, let's go to the QQQ series and the QQQ. This is where we are. I said today that we should be getting a move above 148.14 for a leg D. And we're getting that leg D, another D that we're getting in the Qs. This is the NDX 100 trading vehicle. I'll be right back. Basil Chapman, Tiger 6 hour. Dow's up 3, S&P's down 50 cents. Hope you're right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we're back. A statement in the Dan piece says, consolidation, Basil? I do not understand that term. Is when used and with indices. And I said to him, consolidation for me is when there are lower highs and lower lows, but overall it turns out to be more time than price, like a large rectangular formation. And then I added, an inverse V or arch formation forms a deeper declining pattern. And then I added, you don't understand the word because it became obsolete. Chuckle. Yeah. So that's the way I have to think of it right now. But there are many signs that say the rotational aspect is starting to a little bit of momentum. For instance, if you look at the XLF, this is when the bank indices are coming out with their earnings. JP Morgan, Citi came out and they spiked early pre-market, but then they started to pull back. If you look at the XLF, there's that peak D. Remember, D is where we start to become a little bit cautious. It doesn't mean to say you have to go negative, but you can raise your foot off the accelerator, hover over the brake and see what happens over for a few days. And here you are. Makes the XLF as a spectacular move going from the high 23s to the mid 26s. Spectacular for this particular index. And it hits 26.46 on the 6th of October. And now it's only at 26.23, but it's gone sideways for 4 days. And that's what we saw. We saw that with the IBB. What is the IBB doing? Remember, this is a pattern. I said, keep in mind that patterns repeat. Once they set in place, and it doesn't, I don't know why it is, it defies some mathematical formula to say, well, if it happens in one sector, why would it happen in sectors that are completely contradictory to the characteristic or the makeup of that particular index? And yet that's what happens. A pattern, once it forms, gets repeated like a little fractal all over the show. And there it is, sideways in the IBB from the 336 high, pulls back, then has a spike to a leg, D to the upside. 2 doji candles suggest that they're running out of steam. And my thing has been that the iShares Nasdaq Biotech ETF trading at 338.40 down 49 cents. Unless it uses speed on the downside, this becomes a high-level consolidation. Aha! There's another way of defining high-level consolidation. And that says that if you use time rather than price, even if you spike above very often you come back into the rectangle formation. So we're going to be watching this very closely. The SMHs, the semis, and I said to subscribers this morning, they still are showing some internal strength. Don't even think of shorting them yet, because they are leading and they are still leading the way up. That's the reason why I said there's a chance the S&P could make a new nominal high. I think the Dow could be a little bit weak. It turns out that the Dow is, they're about the same. Dow's just fractionally stronger than the S&P right now. So this is still G/B. The MACD is good. The stochastic's flat at 97%. On balance volume, again, is getting to territory that says, be careful. If there is a pullback, it could be very sudden, and then a plethora of bad news could drag it down. That's the only way you're going to get a Dow minus 175, S&P minus 22 over the coming days. There's got to be some catalyst that says, whoa, weren't expecting that. Bam, 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 selling starts, and then selling has to continue. I don't want to see these one-day pullbacks and then 3 days up. It's just got to be 2 consecutive big down days, and then finally you can say, good, now we're getting some form of a correction. We haven't had that yet, and that's the reason I'm still doing nibbling on the short side and still keeping our longs. Although we did take a profit today in our General Motors second position. We went in at 37.11, got out this morning at 44. At the stop was 44.21, I think it was 22, and now it's trading at 45.04. Still only down 43 cents. But my thinking here is that there's just so much news about General Motors with so many people now interested. I think General Motors is close to some kind of a pullback, and I hope that we can get back in, lower down. I still like it, but this is where I think there is starting to be some kind of topping action in the daily. Not the weekly chart has spiraled to the upside, but the technicals are still very strong at 96%. It's actually 96% in the daily, but the daily is just starting to show a few cracks. We'll see what happens. We've still got our core position from the 34s. And so just wanted to cover that. So you go to the QQQ. QQQ's made that leg D today, and it's still a leg E/C in the weekly chart. Weekly chart hasn't yet crossed positive. I wonder if the MACD actually crosses positive, you could get a whole new buy mode coming in. But I'm just leaving it being as cautious as possible right here. Cautious doesn't mean to say we're going bearish. It just says start building up some cash position. That's all it says. That's the IWM. Now this is going to be very interesting. Look at the IWM. There's that sideways action. So that's the high level consolidation. And what's happened is over the period of 9 sessions, the IWM has been stuck around the 149.50s, a little higher, a little lower, but that's kind of where it is. It's 149.81 right now, up 6 cents. And the single leg A to the upside says, it's almost ready for some kind of a pullback, not a major sell-off, but a pullback at least, 149.79 down to the 147s, maybe 146, high 146s. We'll see. Okay, now I want to get to something very interesting. Look at gold. Gold right now is up 6 at 12.95. What is really interesting about this, see, gold is up 0.49% based on the continuous contract, and this is a leg B. The MACD is about to it is crossing positive right now. The histogram's just turning positive. Stochastic is still only at 47%. That's suggesting to me a lot of work needs to still be done to see the left side high of 1317 back on the 26th of September hit. Now, what's really interesting is my weekly chart is still showing weakness, WEAK. And I'm thinking that this is very interesting because if you look at the dollar is holding quite nicely here. It has pulled back from peak E at 94.27. MACD has not yet crossed negative. It looks like it might, but it hasn't. And the stochastics pulled back sharply. But the weekly chart turns out that the weekly chart is actually holding technically very well. So I'd say to subscribers, the next 2 sessions are going to be really important for a couple of reasons. We want to see whether gold is going to follow through to the upside, get back to its buy signal to buy mode, or it's going to fail here in the single leg up, or the dollar is the one that's going to fail and not follow through. So it's real easy for me. By Monday or Tuesday of next week, the dollar has to be above 93.75, and gold has to be below 12. It's at 12.95 right now. It needs to be below 12.86, 12.85, 10 points lower. And that says, that's it. That little bounce is over for gold, and the turnaround for the dollar is getting stronger. Other way around is if gold goes, I said yesterday, 1307. I'm going to make that 1307 to 1309 if it can get there by Tuesday of next week. And if the dollar slides, and I'll give you the exact figure, trading right now at 93.13. If the dollar slides below this level right here, 92.50, that's going to be quite negative, very negative for the dollar, and positive for gold. Wanted to cover that. We'll look at platinum in a moment. Yeah, look, platinum's holding very nicely. That's a good turnaround, but it's not a great candle. I want to look at UGAS, which natural gas, which is doing very well. Dow's up 0. S&P's down 1. Basil Chapman, Tiger Technicians Hour. Quite cautious right now. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 1, S&P's down 1. We are looking at platinum right now, single leg A. Now this is what you see the way the MACD crossed positive in the daily, trading at 939.30 up 6. You see the way the stochastic went soaring to the upside. But if you look at the price is very strong. Yep, it's gone from the somewhere around the 910s to 939. It's 20 points. That's 22% or something like that. That's very good. But I always get a little nervous when I see the swoop of the stochastic, and it's still a leg A. and then it starts to fail. So this little doji is a question mark here, and this new recovery high today is good, but it needs to close closer to the 942 area. Then I'm going to say, hey, that's really good action. If it closes towards the low of the day, I'm going to say, whoa, that's where you've built up momentum. You're trying to get the torque, but you haven't. What happens is you've gone from first gear, you've really taken off, and you slapped it into fifth gear. And all of a sudden, the momentum can't keep going. It just doesn't have enough of that rotational power. That's really why I have to always have these things figuratively. And that's the impression I have in my mind. So, yes, it'll be great if it holds 929. And by Tuesday of this coming week, it's up at the 945 or higher area. That'll be really good. So that's just what to look out for. Nothing wrong right now. I'm just saying I would have preferred if the candle of yesterday was not a doji, and that today's candle was at 942 instead of 939. I know it's not much. I'm just saying I'm looking at it in terms of the patterns. Now, here's the other thing. Natural gas. Look at this. Natural gas, big spike up today. It hasn't quite held it, but still a very big spike. Nice turnaround. It's improving the weekly chart. And I think it was Greg yesterday. You said he bought UGAS the day before. And then it pulled back. It didn't close under the low of the day, but it had quite a pullback. This is good action. See, this is what I like. The MACD is turning around, but it hasn't crossed positive. Gives you a lot of room to go on the upside if it's going to continue. And the stochastic is just very steady. The price is actually leading the technicals. I actually prefer that sometimes. We'll see. So in either case, here it is 2.966. For the continuous contract, up 0.077, up 2.67%, must make the 2.930 to 2.920 very strong support. In fact, by tomorrow, it mustn't even pull back that much. It should hold round about here. It needs to close on a weekly basis above the 9-period moving average, which is at 2.999. It really needs to close at 3 point anything. It just has to close above it. That would be important. Crude oil, this is to crude oil right now. Had a bunch of questions. I'll get to them. A good statement came out here. I'll get to it in a second. So crude oil, yeah, this is a high level. This is a low level consolidation. In other words, it went to a peak E. It's pulled back under the 200-period moving average. It had a horrible candle 5 days. It went through 5 days ago. It's repaired that. It went above that yesterday. And now it's consolidating. This has improved the weekly chart a little bit. And it says if on Friday we can close anywhere in the 5150s, that would say we should make leg D next week in the weekly chart. A close below 49 says, no, forget about it. And you're trading at 50.79. So my bias right now is to say we should still try for the leg D in the weekly chart. We'll see what happens in crude oil. Next thing is a question about soybeans. Now, do I do that anymore? Let me just check. Yeah, you know what? I can't do that. For some reason, I did something a couple of weeks ago, and I blipped off my some of the commodities. I don't know what I did, and I just haven't had a chance to put them back. So I can go to corn because that's I can get corn right now. Corn is having a good candle for the day, but there's that weekly chart. Doesn't look very good. Corn, which is the ETN, this is the Teucrium Corn Fund, trading at 17.50. If corn, I know there are two different things, soy is soy and corn is corn, but I'm just doing corn is the only thing I can get here. If corn can go above 17.72, was the high of the 29th of September? No. If corn can get above 17, it really needs to get above that high of the 6th of September. 17.88. If it can get to the 1790s by midweek next week without hitting 1720, it's a 1749. Yeah, 1720. All right, yeah, 1720 is a 1749 right now. That will be the first time, the first sign in the weekly chart that you're starting to get a turnaround that has potential to move higher in the weekly chart of corn. Okay, next thing, how did that happen? Just a second. Yeah, so Kevin said, this is very interesting because I just spoken about General Motors. For your information, you probably saw, no, I didn't, on CNBC that Detroit is shutting down plant from slow demand. This plant makes some of its most popular cars, so this latest stock rise could very well be all hype with no profitable substance. You know what's interesting, Kevin, that you said that when I did my homework last night and early this morning, the reason why I said we're going to take off that second position in my newsletter was for the reason that I think all the hype has been in the stock. There is some reality to a certain extent, but we will get a test of GM's strength if GM on Wednesday of next week, let's give it a few days, if by Wednesday of next week, GM is not closed under $43, but is hanging out above the 44 level, I'm going to say, you know what? That's what the reports say, but my chart says that there is a lot of buying in GM. But at this particular point, my chart says there's a potential for a little double top here with the on-balance volume. The MACD is outstanding, but it can pull back. Stochastic's fantastic at 96.70, but it's starting to just flatten, dip a little bit to the downside. I just figured, hey, we've got one really good position, I'm sure, and at 37, we'll have another chance somewhere to get it maybe even in the 30, under 40 and a half to maybe 39 and a half. Could always get back in, lower down. It's money that we've made, and it's in the pocket. Let's see what happens. Could be wrong. At least we've got a position there. So now I got a couple of things. I'll read that afterwards. Let me just go to this. Yeah. So Kevin, I don't know. I think that's a good point. I'm pleased you brought that out because in a way that's what the chart was saying, that this extension from last week, you see that very strong candle of the week of the 6th of October. That was a breakout, and I'm not sure quite what the fundamental news is to take it that high. I could give you the technical reason, and the reason I want you to stay in the trade, I probably should have stayed in the trade now. I just felt that is a real nice profit, almost 20% in a very short period of time. I just wanted that, and I think we'll have another opportunity to get in, but I do want to see how it holds support. Absolutely. Let's look at Ford. Ford is trading at a peak E. It made 7.8. See these sideways formations? Before, sideways meant, because of the technical still being very strong, that you were going to probably go higher. Now the technicals are starting to weaken. I think that Ford's going to pull back from 1224. I think it's going to test the 1180s in the next week. That's what I'm thinking. We'll see what happens. All right, so Dow's down 6, S&P's down a little bit, down 2. I'll be right back. Basil Chapman, Tycho Technician Zal, and we'll get to a couple of the other questions that we're posting in the day.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I thought it would be very important that I look at the semiconductors, because they've led the way up and down for the whole year. And right now I've got applied materials in F/B in the daily. The technicals are really strong. On-balance volume hasn't quite proven itself here, but the leg C is, I'm counting it as a leg C in the weekly, a leg D in the monthly, and 120-minute chart, probably an F. But if you go to the one that really leads, which is LRCX, with Lam Research, trading at 188.95 of 277, I have to count this as a leg C. That means it still has to make a C, a peak C, and then a leg D, and then a peak D. That takes 3 days. That's early next week. And as leg C in the weekly, I would really like to see Ds at least in the weeklies before I feel that the semis are going to actually tank rather than just consolidate at a high level. And the monthly chart is a whopping leg E, and the 120 minutes is A, B, C, D. Call it an E right now. So these are leading stocks, and Intel, INTC, which suddenly perked up the other day. Well, no more than the other day, last month in September. Last month, September. Went to a peak F and then a G/C. I think it's more like a G based on the MACD turning down. So this says we're getting a little toppy, but it's not quite done yet with some of the stocks. All I can say is that Taiwan Semiconductor, Taiwan Semi, TSM, right? TSM, Taiwan Semi. Yep, Taiwan Semi. Look at this, brand new leg C, A, B, C in the daily. I thought I'd done this. I haven't done it. All right. They are very close to topping out, but they haven't topped out yet. It's going to take a couple of days. So I'm watching this closely. So this is what I'm saying. I want to emphasize that what I'm really looking at is a process. And I suspect that the Dow, the S&P, the Qs, the New York Stock Exchange, NYA.X, New York Stock Exchange, probably a G in the, that would correspond with the MACD, a G in the daily. They're very close to some, once again, a digestive formation. Does it turn out to be one of these, an oval pattern? Chapman wave stalk leg, which needs one quick spike to the upside, then it pulls back, and then if it takes out the body, the support in this case at 12,345, if it takes out 12,281 as key support at any point, then it's going to go quite a bit lower. That'll be the arch formation. But yeah, it's a process, and that's what I'm really looking at. But I have to insist for my technique to get a sustained down move, I have to have bad news filter into the market, and it can't be all at once. It's got to be bad news and then a few days or a week later, the same thing happens, only it's worse, and then you speed up that process. Quicker and quicker comes what the market perceives as market bad news, not bad news because it's cloudy. It's real bad news. And it has to perceive that it's something serious, and usually it's something a little different. That's number one. Number two is the VIX index has to rally. Look, it's under 10. It's at 9.96 right now. That's still buying pressure, support pressure, let's call it. You have to see the VIX start to trade in the 13s, start to close every other day or so at the highs of the day instead of at the lows of the day, start to turn the teens into home. That's where it wants to be. And each day the market just makes lower lows and lower highs. And the VIX, the S&P futures close every day at the lows and open the next day with negative overseas action, and then opens the next day at -12 to -15, tries to rally intraday, gets to like a -5, and then whoop, closes at the low of the day. That's bear market, and we haven't had that kind of bear market phenomenon. Those three factors are really important. VIX, bad news, and the futures opening poorly, trying to rally and closing poorly, at least 3 out of 5 days a week. That'll set you up on a really strong down move. We haven't got that yet. Okay, now let me do a couple of things. I said that I would talk about the Chapman Wave Trin Index. I would not have brought it up. I would have left it for my subscribers, but we had someone in the den mentioned the VIX had hit a high. It actually went to 2.09. That is above the level that I look at. That's the only way I use Richard Arm's Trin gauge. I call it the Trin gauge. He calls it the Arms Index or Trin Index. I just use numbers, and you can see by this that it has an incredible accuracy rate. And if you go by all of these, there it failed once. I think I might have forgotten to put one other failure, but in this year, it's got an incredible record. I remember it failing another time. Maybe I didn't put it in, or maybe it failed because it pulled back very sharply when it should have been a negative Dow. And the Dow was much higher, but then it pulled back sharply intraday, but didn't go negative. Maybe one of those. But missing 2-3 times out of all the numbers that we've seen, that's a nice index. And that's saying that there should be weakness in the Dow early tomorrow morning. That's all it's saying. It doesn't say how much. It doesn't say anything. It says before any rally can take place, there should be a negative Dow early morning. And that's what I'm looking at. So now if you look at the 120-minute chart of the Dow, we've gone to a leg E. The MACD is deflecting lower. I drew this in for subscribers this morning already. I put in this little rectangle showing there's a chance to deflect lower. Stochastic's very strong at 95%, but starting to pull back. If you're looking at the chart that only has my Chapman wave, I've had to move the 5 because that was a 5 conclusion, and we went to 1, 2, 3, 4. 5 is unfolding as we speak. Leg 5, I don't have it now as a leg 1 yet to the downside. Days young. I think that I could be totally wrong. I think that we are within 50 points max of some kind of a short-term top. All right, that's just the way I'm looking at it. Doesn't mean you go all out and short. We don't know how this rotational market, what happens if Bank of America tomorrow comes out with fantastic news? It could spike, help spike the other financials in the market higher. So this rotational aspect is what's kept the market up. The Dow's pulling back, and then Walmart comes out and gaps up 3-4 points and moves the Dow back to positive. This is what's been happening day after day. McDonald's suddenly. All I can say is I want it to be a process. I want to be part of that process. I want to go into it slowly. I want to come out with being right more than wrong, and that's why we're doing it step by step. Okay, so what it'll say is the 22,842 level on the Dow is really the 9-period moving average that it's touched yesterday, touched early this morning, hasn't closed under it, and since closed. You know that you have the 120-minute chart, we have not closed under the 120-minute 9-period exponential moving average. Holy moly, since 11:30 on the 27th of September. You find me another period that has been this prolific to the upside and holding support. It doesn't happen often. So I think we're just ready for some kind of a pullback. That's all I'm saying. Days young by the end of the day. What if we're up 35 points? Right. No, I think today's a good chance to be down. We'll see. All right. Enough with that. The next question I had was, oh, there's the music. I've got a question waiting right there. Good grief. Where did it go? I'll find it. Oh, okay. We'll be back in a moment. Someone wants to know about my yields. I haven't gotten to the yields. Of course, I'll do that in a minute. There's the TLC. I'll be right back.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Yeah, nickel. Okay, Dan wants to know, can you take a look at JJN? JJN. There we go. Oops, wrong one. Didn't mean that. So here's the E-mini. This has gone to a 10-minute peak. E right there, pulling back at 255, 0.75. Can you believe a whole day might go by without the E-mini going to, let's just see, I don't want to talk out of turn. Yeah, to going to 255, 3.75 for a new all-time high. Wow, that would be amazing. All right, so let's go to, did I get that right? JJN. There it is. All right, so I must remember that. This is the iPath Bloomberg Nickel. I'm sure it's an ETN, or maybe it's a fund. So this is it's a leg B. So what is the question? Yep. All I can say is that I'm doing this at a glance. I would like to actually pull this up a bit bigger. Let me just do that daily chart. Yeah, I needed to see that. Yes, this is very nice, actually. See, this is what I was talking about before. You see the way the stochastic made a W formation and then screamed up to 81% with the price moving in some kind of a visual proportion? and the MACD crossed nicely up. This is good action. This says that JJN, the nickel ETN, is trading at 13.78, up 30 cents, that it has support at 13.15. I would actually say the support should be at 13.50. It shouldn't even break under that. What it needs to do right now to make the left side, right side price time match is to close, to fill the gap, is to get to 14.35, and it can take 3 days to do that because it's a daily chart, but I don't want to see it do more than 3 days. And if 3 days it can push above that, you'll be testing the left side high of the 5th of September of 14.90. This is the reason why I wanted to try to keep our commodity index long that we've had for a while now, because some of the commodities are rotating quite nicely for support. They're not breaking up, but they're doing very well, and this is one of them, and that is nickel. Congratulations. Let me do this quickly as we're going to go out. You're going to go to Steve Rhodes, and I'm sure he's going to give a great recap and see what he's doing. The VIX index is at 10. By the end of the day, if the VIX index is above 10.35, that would be a sign that, yeah, we should have that VIX, the short-term trading index pull back in the Dow tomorrow to negative early in the morning. If the VIX goes to 10.93, I don't know.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.